The focus throughout my career has been on private markets, with the majority spent at CPPIB and the Ontario Teachers' Pension Plan. The private equity strategy at Fiera Comox largely replicates the approach of these two firms. In particular, our portfolio is diversified across sectors and geography, with a focus on maximizing returns without undue risk of loss and a long-term mindset. We view this strategy as a comprehensive private equity solution that provides a balanced exposure to the asset class for our clients, which include institutional investors such as pension plans, endowments, foundations, as well as private wealth investors. There are 4 key pillars to our fund strategy. The first is a focus on direct investing. The second is a focus on mid-market companies. The third is a conservative DNA in investment underwriting. And the fourth is diversification. First, our fund has a strong focus on direct investing, or investing in individual companies. Direct investments represent more than 80% of our fund's portfolio. My career has been focused on direct investing, which involves sourcing new investment opportunities, rolling up our sleeves and conducting very deep due diligence, hiring third-party experts to dig into legal, tax, accounting, and other specialized work streams, performing valuation analysis, financial modeling, sensitivity analysis, negotiating legal agreements, structuring transactions, and arranging debt financing. This process is very labor-intensive, but my entire team has these direct investing skills, enabling us to make sound investments that maximize returns without undue risk of loss. This approach contrasts with other private equity investment offerings that may have a greater focus on fund-of-fund investing, which is a lower value beta strategy and often comes with a higher expense burden and the potential for diluted returns. As mentioned, we also primarily focused on investing in mid-market companies, which we define as companies that earn between $10 and $100 million of EBITDA. In our opinion, this is the most attractive part of the market, as these companies are large enough to have a real competitive moat and attract professional management teams, but small enough to allow for value creation initiatives to materially impact returns on the upside. The median EBITDA in our portfolio is approximately $65 million. This contrasts to mega private equity funds that focus on large cap companies where valuations are typically higher and expected returns are often lower. Another pillar of our strategy is a very conservative DNA that is present across all facets of our investment process. A hallmark of any good strategy is a clear understanding of what you don't do. We don't invest in venture capital. We don't invest in turnaround situations. And we don't invest in emerging markets. Instead, we invest in mature companies that have a history of profitability with real competitive moats and fantastic management teams. We focus on companies based in developed markets. Also, the average financial leverage on our portfolio companies is only 3.3 times EBITDA, which is far less than other private equity firms where more than 5 times is common. There is also no permanent leverage at the fund level. Senior members of our team, including myself, have a significant amount of our personal wealth directly invested in the exact same portfolio alongside our investors, and capital preservation is very important to all of us. Lastly, on diversification, our fund is designed to be a comprehensive private equity solution to our investors, so having a diversified portfolio is very important. Our fund owns more than 25 assets, and as can be seen in these pie charts, we are diversified by sector, geography, and individual position. This compares to other private equity funds that are typically highly concentrated on only 8 to 10 companies. Overall, the fund has been in place for more than 6 years now and has worked extremely well for our investors, who have benefited from attractive and steady investment returns during all phases of the economic cycle.
Fiera Capital Corporation does not provide investment advisory services or offer investment funds in the United States or to U.S. persons. Investment advisory services for U.S. persons are provided by FCC's affiliates who are either registered with the U.S. Securities and Exchange Commission or operating pursuant to an exemption from such registration.